Hi, everyone. If you're starting to question the system and want to protect what you have earned, you will want to download our free Gold and Silver Protection Guide. It's a clear, easy to follow resource that explains why gold and silver have stood the test of time and how they can help you build real financial security even as the dollar weakens. You'll learn about which metals to consider and the plan that best suits your needs, not Wall Street's. So click the link or scan the QR code to get started today. You're not going to regret it. My guest today says that $10,000 gold is a potential, and he makes a compelling case for it. You definitely want to watch this interview. Please welcome to the show Ken Hoffman. He's the head of commodity strategy for Red Cloud, and I've been following his work, for close to 20 years now. Ken, you have done always fantastic work in the sector. I mean, since your days at Bloomberg Intelligence, et cetera, I've followed your career. So good to be reunited with you. Happy for your new role here at Red Cloud.
Thanks very much for having me. I'm excited to be away from McKinsey, where I can actually be opinionated.
You can speak to me again.
Exactly.
You're a free man.
Exactly.
Well, look, I'm happy for you for this newfound freedom, and Red Cloud's a great place to be. Talk to me about why you think $10,000 gold is in the cards. By the way, side note, I've just literally landed back from Rick Rule's fabulous conference in Boca Raton, Florida, where the crowd was uber bullish, both gold and silver. That said, I'm more than curious to hear your thoughts, Ken. Take it away.
Yeah, my take on this is, look, for 100 years, the world has sort of followed the U.S.'s lead. You know, we came out of World War II, where the whole rest of the world was demolished, and so U.S. industry looked amazing. And that wasn't really exceptional. But what was exceptional was really what we started to see in the 50s and 60s and 70s and 80s, which is free trade. Let's have every country in the world sort of open up to free trade. And that really worked well for the U.S. on a few fronts. Free trade meant the pie got bigger. And so even though if our piece of the pie shrunk a little bit, overall the pie was growing so fast, it was very, very good and made the U.S., the largest economy in the world. After the Vietnam War, what happened was U.S. went off gold standard. Price of gold went up 1,800% in the 70s. But what that allowed the U.S. to do is let its dollar sort of float. We could print whatever we wanted. We were the king of world trade. And it was a great idea because what happened was the U.S. started to run deficits. Those deficits needed to be financed. And if we ran trade deficits, that gave foreign central banks the reason to hold dollars, which gave them the reason to hold U.S. currency and buy U.S. debt. And that has been the status quo now for really the last 50, 60 years. In this century, we've had a whole bunch of things go on. First, we had 9/11, and then we had the great financial crisis, and then we had COVID. All of those things added substantially to the U.S. budget deficit. But again, that's okay. The rest of the world is going to buy our debt, and that's going to stabilize the dollar. And I think for listeners to understand, forget all the noise you hear in the podcast and people saying, whatever they want about the U.S. economy. Just watch one thing besides gold, and that's the DXY. DXY is the dollar weighted trade index. That shows you the health in the United States and what the rest of the world thinks of the U.S. So where do we stand now? Last time we met, gold was $1,650, and I watched my own talk with you from almost 5 years ago. Gold was $1,650, and I said there's a trend called de-dollarization, where the rest of the world is going to start using less and less dollars. That's going to cause the dollar to sort of, people to put money into gold. Now we fast forward 5 years. Here's a couple facts. The U.S. has slipped in central bank holding. It's about 55 to 60% of central bank holdings is in dollars. And gold is the number 2 holding in central banks. It's almost 20% of central bank holdings. Now we bring in Trump. And Trump is as big of a deal to the global economy as all those other major events I spoke about. Why? He wants to end all of what the U.S. has done over the past 100 years. He wants to pull the U.S. away from fair and free trade. He's using tariffs as a weapon. At the same time, what he's doing is you're running ever-increasing deficits. So there's no one out there to buy the debt that you're doing. And I think where this all lands at the end of the day is if I wanted to destroy the dollar, I could not do a better job than this US government is doing. And so what that is going to lead is the rest of the world saying, wait a minute, the US is no longer our friend. We don't want to trade with you anymore. You don't want to trade with us. So we're going to use less and less dollars. The dollar and the DXY will continue. It's already down 10, 12% this year. It will continue to fall. I think it could fall 30 to 50% over the next few years. It's around a 9% decline in the DXY. It's around a 3x increase in gold. Gold's up around 28, 29% this year. I think that continues. So I think the fall of the dollar, the need for an alternative currency and a currency that the US can't attack. If everybody goes into euros, the US will attack Europe. If everybody goes into Japanese yen, the US will attack Japan. If everybody goes into gold, there's no one to attack. And that's why central banks love gold. That's why they're piling into it. And therefore, all of those things are supercharged at this moment in time. And so that's why I think you're going to see gold not go, I think midterm 5,000 is a fairly easy target, but 10,000 plus, we're going to get into the area where we're going to have to find a new normal because the world is almost going back to a gold standard in a certain way.
So 10,000 plus within which time frame, Ken?
Probably within the next 3 to 4 years. I mean, because I don't
Wow.
think, I don't think the U.S. is going to stop doing what it's doing. I don't think, I
Right.
think there was this thing, oh, the U.S. is going to have some tariffs and then we're going to go back to normal. It's not the U.S.'s way. What you're going to see is using trade as a weapon will continue. Deficits will continue. All of those things are sort of set. I mean, look at Brazil. The U.S. has a trade surplus with Brazil, so we slap a 50% tariff on them because we don't like some of their local policies. I think this new weaponization of tariffs, where you can just sort of say whatever you want, throw that tariff on, the rest of the world is going to say, I don't want to deal with a country that acts like this. And so they're going to be like, US, take your sandbox and go away. We're going to do this. And you're actually starting to see a lot of the other countries in the world sort of saying, how do we work in a world where the US is minimized? And if that's the case, we're going to need a currency. And they've already decided that currency is gold.
Question for you, because the US is obviously looking at this, realizing that other countries are going to find solutions outside of the US dollar. So the question is, do you think this is done on purpose? Is it orchestrated? We know they do want a lower dollar, Ken.
Oh, yeah, that's the whole purpose behind this Mar-a-Lago Accord is to drop the value of the dollar. But gold is valued in US dollars. So by its very proxy, if you see the dollar decline, and the DXY was around 110 at the beginning of this year. It's around 90, 98 today. It's low over the last, it was really 2008, hit a low of 70. So I think that's the first target I think gold will hit. But yes, you were right. There's something called the Mar-a-Lago Accord, which is sort of this story in the media where the U.S. wants to seriously depreciate the dollar, perhaps to pay off the debt. But when you depreciate the dollar, that's incredibly inflationary. And there's sort of the conundrum you're in. If you lower the value of the dollar, inflation is going to soar. The Fed's going to try to fix that with higher interest rates. Wait a minute, we want to fire the Fed chair to have lower interest rates. This is just a perfect storm of bad things that are happening to the dollar that I think only get
Right.
worse. And therefore, the safe haven is gold. And there's an interesting point. In Singapore, there's one of the world's largest stockpiles of gold. They built a 10,000 ton sort of Fort Knox in Singapore. And you watch a lot of the Asian conferences, and I like to stay up at night and watch Bloomberg, where I used to work, and they have a lot of family offices, and every single person says we're buying gold and we're putting it into Singapore. Because they can see the value of currencies are going to be devalued. And again, gold is number one out there. And I think that's something that's really interesting. And, you could always have black swan events. I mean, I'm waiting for the morning where one of these superconductors breaks into, Bitcoin or something, and all of a sudden $1 trillion of Bitcoin has been stolen and lost. And then you can't do that with gold. So I think there's a lot of positive things that are going to happen to gold. Now, do I invest only in gold? I do partially in gold. I'd really look at the juniors because the stocks have been way left behind. And I think you just load up on these juniors because I think they're going to absolutely explode.
So I guess, because I often get asked, well, what happens when the central banks, particularly China, slow down and stop buying gold? We know that much of this gold rally was fueled by the uptick in central bank buying, the historic level of central bank buying of gold. Do you see a slowdown in the future, Ken?
No, I think it speeds up. Again, central banks have to hold currencies. That's what they do. And you've seen actually in what we talked about last time, 2000, around 73% of the world traded dollars. That number has dropped to last year was around 53% and will fall into the 40 something percent range this year because of the tariffs. Again, if I don't have to hold dollars, I need to hold something else. And even if you took, if you go from 53, 54% to about 42, 43%, about a 10% move, that's $1 trillion that needs to be reallocated. And right now, the lion's share of that reallocation is going towards gold. And that's why you're seeing this huge move in gold prices. And again, I don't think that stops. I think you're going through this almost once in 50-year change in the entire global trade system. And that's what we're seeing right now. And that's why gold is exploding. And I don't think it stops here. I think we're in inning 1 or 2. It doesn't end until probably this administration leaves. And then even then, I don't think the rest of the world will trust the US for a really, really long time.
One more question before we move on to silver and copper and other things. The BRICS summit, as we know, just concluded, and we saw Trump firing back, saying any country that aligns itself with the anti-American policies of BRICS will face additional tariffs. Uh, so obviously, there's a fear of the BRICS nations turning away from the dollar here, right, Ken? The question is, do you think these fear tactics scare them from doing so?
I think it actually galvanizes them. I mean, the more you see these blanket tariffs come onto the market, you've actually seen the European Union reach out to their Asian counterparts to say, how can we set up a system that doesn't include the US or doesn't give the US the power they have over us? Again, for a long, long time, you had this deal. It was a great deal. US will run deficits, but the US will also protect you militarily. You are going to buy our debt and keep our interest rates low and buy our dollars. And we'll have surpluses with the US. And it all worked out. That's all being ripped to shreds right now. So right now, it's the US trying to dictate to the rest of the world what it wants done. The US is the world's biggest economy, 22, 23% of the world economy. That other 80% is saying, no, you're just not going to do this for very long. We need to change. And you're starting to see in their policy, if you look outside of the US, the rest of the world is saying, we don't want this to happen anymore. We don't want one country to be able to sort of bring us to their knees. So we're going to go change. And again, the easiest way for them to make this change is to go towards gold. I would not be surprised if gold is a major part of the realignment of global payment systems. And
Wow.
I think that's why you see these central banks just absolutely piling into gold over the last 3, 4 years. And it's only going I think it's going to accelerate, not decelerate.
Yeah, it makes you wonder why the central banks that aren't following the trend, why they're not doing so. Like
I
Canada,
mean,
for example.
by and large, I mean, you have seen a lot of banks and it's small, but I mean, like Zimbabwe has introduced a gold-backed currency. You're starting to see other central. Poland has been a big buyer of gold. I think one
Yes.
by one, you're starting to
Turkey.
see this.
Right.
China has been consistently the biggest buyer of gold for their central
Yes.
bank. And I
Yes.
think, again, they're afraid. Could you see a gold-backed currency? Yes, because if it's gold-backed, again, there's no bank for the US to attack. It's
Right.
gold. And so I think that is where this world is heading. It's something I believed in for a long time, but I think the recent policy changes of the US and again, I think don't underscore when I travel around the world, the lack of trust in the United States is unbelievable at this point. I just don't think that happens. And if I don't trust the US, then I don't trust the dollar. And
I
again,
agree with
it
you.
doesn't matter what you say on any public platform or whatever, just watch the DXY. The DXY is going to
Yeah.
tell you what the world thinks about the dollar, and they don't like it.
Are you bullish silver?
I've only, I mean, silver always has a bit of a coattail from gold. It's always been the hardest metal for me to look at because of its industrial uses as well as it's a precious metal. You do see that now. That gold is really interesting because the Basel III Accord, which just came into effect a couple years ago, makes gold a full monetary asset. So if I hold silver or platinum or something else in the central bank, I only get to value it at 50% of its value. And it was the same way for gold, but now gold's 100% of its value. So I think silver will always sort of follow on the coattails of gold. I don't think you can, I mean, the
Yeah.
ratios, we can always argue about that. But I think silver and platinum and palladium, by its very nature, number one, they all benefit from a depreciating dollar. So they get that tailwind. Two, I think, as people sort of, if they believe gold's too expensive, then they sort of go into silver and platinum and palladium as well. And I think we've seen some of that. And I think also there's this, hoarding effect. We've seen this in copper. I think we saw it at the beginning of this year with gold, where there's a big fear where there'll be a 50% tariff on one of these metals. I better get it in before the tariffs occur. And so I think that's also occurring with silver and platinum and palladium, and sort of giving them some tailwinds.
Okay, last point here. Couldn't wait to talk to you about copper. We see the copper threats, tariff threats, and what it's done. How exciting is the copper market right now, Ken?
It's crazy. It's something unprecedented. Again, it's destroying yourself. I mean, put a 50% tariff. You're not going to see copper mines come on any quicker. All you needed to do if you wanted more U.S. production is to sort of work to speed up mine development in the U.S. And there's really only two in the U.S., the biggest being the BHP Rio in Arizona. I think it's in Arizona. They have a massive mine Resolution. There's a lot of countries can do to speed up mine development. In the U.S., the biggest thing that upsets people is like, I'll have the federal government come in and do an air test system, and it takes 9 or 10 months. When they're done, then the state comes in and does their air test. And if they're different than the federals, then they have to go back and do it all over again. And then when we're done with all that, now we'll start with water. And sort of a common sense approach is, why don't you just all work together and do all the tests at once? So then rather than 27 years to get a new mine up in the United States, it can be 7, 8, 9. I think you're starting to see some of that sanity come back into mine development in the U.S. But even so, it's still going to take 8, 9 years because a mine just doesn't go poof. So in the meantime, putting a 50% tariff on copper, all it's doing is just sending the price of copper to all-time record highs in the U.S. We're getting close to $6 a pound in the U.S., which is absolutely crushing industries like utilities and the car industry. And even my plumber came in the other day. We had a pipe leak, and he's like, "You believe what I'm paying for this copper?" All those things do come through. So do you trade it? I'm in a lot of these chat rooms of traders. I mean, do you assume that Taco is going to come out and change the 50% tariff, and so you need to be short the COMEX and long the LME? That's for traders to sort of think about. But all these things are just, again, show that there really is no strategy here in the U.S. But to destroy the value of the U.S. dollar.
All right. Compelling thoughts. Ken Hoffman, I'm so glad to be back with you, reunited. As you're talking about gold, I'm thinking, well, this is why I like owning it, and I sleep well at night. And I invite everyone thinking about it to call us at ITM Trading to help us build a strategy centered around it for you, tailored to you. And you can do that in the link below the description and book a Calendly appointment. Ken, thank you so much.
Thanks for having me. I was happy to be back, and hopefully we'll do this again soon.
Yes. Now that we found you, we're not letting you go. You're going to be on all the time now.
Sounds
Thank
great.
you so much. And thank you all for watching. We'll have more great content coming your way. Be sure to subscribe to our channel. Keep watching the Daniela Cambone Show here on ITM Trading. Thank you.